Watching for RSI divergence between price of your security and the RSI indicator in your price action trading strategy is super important. In this video, I will go over the use cases of RSI divergence and its PineScript code implementation in TradingView. Conceptually, the divergence occurs when a security price makes a new high or low in price, but the RSI does not make a corresponding new high or new low. Now, the use cases of RSI divergence indicator. The first one is identifying potential reversal point. For example, if the RSI is showing bullish divergence, that is the RSI is moving higher while the security price is moving lower, this could be a sign that the securities price may be about to start moving higher. Then the next thing that you can use RSI for is confirming trend direction. For example, if the RSI is showing bearish divergence, that is the RSI is moving lower while the security price is moving higher, this could be a sign that the securities price trend is still bearish and may continue to move lower. And the next one is identifying overbought or oversold levels with RSI divergence. When the RSI is above 70, it is considered overbought, and when it is below 30, it is considered oversold. RSI divergence can be used to help confirm whether these levels are likely to hold or if the security price is likely to continue moving in the same direction. Trend traders can use RSI in their trading strategy to buy near oversold condition when the trend is up, that is buy the dips, and sell short near overbought condition in a downward trend, that is sell the rebound. And to add the RSI divergence, you just go into your indicator and search for RSI, and that's your RSI divergence. In my plot here in the BTC 1 hour chart, it was already added, so I'm going to work with that. And now I am going to just look into the PineScript code of these predefined RSI divergence in TradingView. So you just click on here, this symbol right here, this icon right here, and that will take you to the source code of these RSI divergence in the Pine editor, and that's my editor. Also note this editor by default will be logged, that is you will not be able to change anything because it was made by somebody else. So what I'm going to do is just save a copy of this in my PineScript editor. So you just click on this, make a script copy, save, and now I can change this. Yes, because I'm going to put few comments here before explanation of this code, so I needed to make this copy. So the code first defines a study function with the title RSI divergence and also short title. It then sets two input parameters, len fast and len slow, which represent the length of the fast and slow relative strength index calculation respectively. Next, SRC fast and SRC slow, defined right here, which represent the source data for the fast and slow RSI calculations. In this case, the source data is set to the closing price of the security. The code then calculates a fast RSI, that is this variable right here, using up fast and down fast. So this up fast variable up_fast, this is calculated by taking the maximum of the change in the SRC fast data and 0, and then applying a len fast period relative moving average to the result. And the relative moving average is this function right here. If you place your cursor, we see the definition. It's a moving average using in RSI. It is exponentially weighted moving average with alpha equal to 1 by length. And actually, if you are interested, you can check there the RMA formula in the official documentation of TradingView. So this is the formula for RMA, which is equal to alpha multiplied by source plus 1 minus alpha multiplied by RMA, and alpha here is 1 by length. Alright, in the next variable down fast, this is calculated in a similar fashion. Only difference is that it takes the minimum of the change in the SRC fast data and 0, and then applies the len fast period relative moving average. And now that we have our down fast and up fast, both these variables are calculated. Now finally this RSI fast is calculated with these ternary or tertiary conditional statement. And this statement just implements this method right here. That is a formula for RSI fast, which is equal to this part, 100 minus 100 divided by 1 plus up fast divided by down fast. And then it follows a similar pattern of calculating the up slow and down slow, and also the RSI slow. And now that we both have RSI fast and RSI slow, this is the divergence calculation line, which is the most important for this indicator. So this line just calculates the divergence between the fast and the slow RSI by subtracting the RSI slow value from the RSI fast value. And then this divergence value is plotted here on the chart using the plot function, with the color set to green or lime if the divergence is positive and red if it is negative. Finally, a horizontal line is plotted at 0 to serve as a reference point. That pretty much wraps up this video. Thank you very much for watching, and if you liked it, smash the like button, and also don't forget to subscribe, as over the next few weeks I will do a whole series of videos on technical indicators. So see you in the next one.